Okay, I'm trying a multiple account strategy with limited risk, meaning I have to settle the direction. The direction of the market looks bullish. Okay, on the gold, MGC, the micro. All right, we have the hourly chart right here. We have all the moving averages going up. We have a nice pattern, a nice cup with handle situation. It looks bullish. So I want to take my trade. It broke the trend line here and it's pushing up. So I went long with my stop loss right under that pivot. That's the first trade. That's one account out of 5 paid accounts that I have with Apex. Okay, because I believe it's bullish, I also understand that liquidity sweeps can take place and this thing could sweep me out of this trade and go right back up. As long as it's overall still bullish, I have a second trade waiting down here with a different account at the sweep level. So where my stop loss is for this trade right over here, I got in right here, and where my stop loss is down here on my first trade account, I have my second trade account behind my head here in the video waiting with a stop loss right down here to get triggered in, with a stop loss underneath this consolidation down here. Okay, so it's using structure, because a lot of times we'll see this formation here like this and price can come right back down to it and go right back up. So I'm using structure, I'm using Fibonacci levels, I'm using legitimate trading plan, risk management setups, and I'm only going to use 2 accounts today because my thing is, if it keeps going down, if it trades past, let's look at the hour chart again here just for an example. If it keeps going down, here's that level right there for my second trade entry. So first, well, actually my stop loss on the second one. If it trades, well, you could really take trades all the way down to sweep in this level here, but that was the low. Was that the low of yesterday? Yeah, that was the low of yesterday, I think. Let me make sure. Yeah, it looks like that was the low of yesterday. So if price were to break that, and it could, if we look at the day chart here, here's yesterday. Let's take a closer look at that, because you got to say, hey, it's too far down now. I'm not interested in going. I mean, why would I not be interested in going long on this day right here? You see it's still bullish. If it breaks the red line, which is the low of yesterday, and decides to consolidate and keep going, I think that would be the last. Maybe if I do a third trade, that would be where I get out. It wouldn't be, I don't think I need to hold it that long. Let me see how much of a actual loss that would be if I were to get in that trade, starting right here down to here. Yeah, that's another whole, yeah, it would take a maximum loss on that particular account. So do I really want to do 3 accounts today? Yesterday it helped me to do 3 accounts because the third account really had a nice winner on it, although the first 2 were losses. I'm not sure if I want to do 3 today, though. If these 2 fail, then more than likely it is going to go all the way down to the low of yesterday, and I don't want to ride that out. If I were to do a third trade, it might be interesting to let that second one stop out and then let price go on without me being in a trade until it gets down to this level and pick up the trade down here instead of riding it down. But there's different ways to do it. Each account has the same risk level, so we're not adding to a losing trade. We're not dollar cost averaging in one account. We're not going to blow any accounts that way. This is a legitimate trading strategy, in my opinion, using multiple accounts, using support structure levels, Fibonacci levels, and precise entries, and dedicated stop losses. All right, so let's see how it works. I'll keep you posted. Okay, I waited as long as I could, and the first trade ended up hitting close to 1-to-1. I got to learn not to get out before it hits target, man. That's just something. But boy, I was biting my nails to get it as close as possible. So our trade 1 Basically, came to first target and I closed it. All right. So we can either stop for the day. Let me show you what we got here. Alrighty, here we go. You can see right here, 260. So we're at 50,905. Now we get a payout, Lord willing, at 52,600. So we got to get this up to all of these actually to 52,600 before I can take a payout in any of them. So we made back our losses from yesterday, plus we're up. So we're heading in the right direction with this strategy, and I may get in again, but I also just wanted to demonstrate how this works. I didn't have a chance to enter the second trade because price never came back down to the exchange from one account to the other. Remember, we get in for all the right reasons. The direction of the market is obvious. Support and structure is obvious for our stop losses. And we use one account with limited risk for each trade. If the first trade fails, it fails at the area that we've already pre-planned and established our risk reward, and we enter in the second trade basically right at the same area the first trade stops out. And that's the idea, is that sometimes you get stopped out, sometimes there's a liquidity sweep, but the price goes right back in your favor. You're right about the direction, but wrong in the timing. So this helps us with our timing and helps us if we're right in the proper direction of the stock, or I'm sorry, futures. So anyway, I hope that makes sense how we're doing this. I'll talk to you later. God bless you. Peace.